You're looking live at the John Tozzi Electronic Trading Center at the University of Michigan. Joel Elconin here with a little different pre-market prep show. Let's run things down real quick. We're in the red by 21 handles at 37.9850. We'll just be keeping an eye on that closing price from yesterday, 19.50. That's our hurdle. We have crude in the red by 79 cents at 88.29. Can't get through that 90 bucks. Gold in the red by 1180 at 1653.80. Can't get back over 1700. Silver in the red by 21 cents at 1927. Bitcoin can't clear 21. That's down $505 at 20,215. And Ethereum, that's taking it more on the chin, down over 4% at 14.99. That's down to $67.
All right, let's get pre-market prep started. Coming to you live from downtown Detroit, this is Benzinga's pre-market prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, folks. Here we are, as I said, at the University of Michigan, the John Tozzi Electronic Trading Center. Let's bring in Triple D, who's probably tearing up that keyboard, and Money Mitch. Triple D, how is the after hours and pre-market treating you?
All right, Dennis should be joining us in quite a little second here. Looks like he's getting his camera on, but excited to get into it. Looks like Joel is on the road. Taking the show on the road. I love it.
Yep, they let me out of the house. We got the big Michigan State game tomorrow. Going to be up here for that. But we got to look at the markets here. And well, I see a little bit of green. I see Apple. Can Apple save the day for us? That's up $1.02. Triple D, how you doing?
Doing okay. It's been a hectic morning here, so just running around. The furnace wasn't working here again, so you get a new house and stuff just doesn't seem to work, so always fun. So trying to get the bugs out of it. So anyways, dealing with that. It's cold here, and it's just starting to warm up, so I think I got the furnace here working now.
Well, you were looking for a disastrous Q3 earnings season. You've been preaching about it for a couple weeks here now, and now it's come to fruition. We're back at 3,800. I mean, we tried to rally this week. Is there any hope, Triple D? Is that we can turn you? I mean, is there any chance? I mean, I see Apple up $1.09. We can go over that report in just a minute or so. But is there still the wicked rotation going on?
Yeah.
I see Bristol Myers up, Pepsi up, Coke up. What are you seeing in rotation land?
Yeah, no, it's the same thing. So this is the good news for the market. It is finding reasons to stay up, and that is because the rotation continues. The rotation from high PE to low PE. So also obviously the rotation from growth to value. That is still in play. It was in play big time yesterday. So, you look even like a stock like Gilead. Well, it reported earnings overnight. I don't even care what the report was. It's just the kind of stock that they want to buy right now. That's the kind of stock that they're looking, lower PE. So you've got that cushion, and that's what I think, this market is going to continue to be. I was tweeting yesterday. I mean, this might not just be a market that, is going to jump right back into tech. If we look back to 2001, 2002, after the tech bubble burst, you had a rotation to value and low PE stocks for about 5 years. So we have these pockets where growth is in favor or value is in favor. This year, this has been the value year. So we're not like we just started this yesterday. It started, at the end of 2021. They started rotating out of the nosebleed valuation into lower. And you can see it. There's a lot of obviously stocks that are trading much, much higher, and some that are close to all-time highs, but those things all have one thing in common. They're value stocks or low PE stocks. So I don't think this is just, a thing, for the last 9 months. Eventually, we're going to go back to tech, and it's the environment that's
It's here to
different.
stay. It's here to stay.
It's here to stay until interest rates start to come back in. So
Exactly.
as soon as they started raising interest rates like they did, it was a tip off to get out of the high growth and to get into, cash now. And why is that? If you just think logically about it, if you go into an environment where, higher interest rates are happening or inflation is happening, future earnings are worth a lot less than earnings now. And that's because those dollars in the future are not worth as much in an inflationary environment or with interest rates. So when you're buying growth stocks, you're buying future earnings. Those earnings are worth less. So then you start going through it and you start thinking, okay, well, if that's the case, then it's an environment where if you can get more cash right now, the cash cows stocks that are making money right now, lower PE stocks right now, though that money you're getting right now, and then you can do something with that money. So it all makes sense, and it all comes back to the Fed once again. So if the Fed pivots, if the Fed starts to say, hey, okay, we think we've got inflation in check, and all of a sudden we're going to slow the pace of rate rises, that changes the narrative
Everything,
overall.
yeah.
And then you could start seeing the rotation come back into growth to value, or from value to growth. So I don't think you jump in until you start, one, seeing inflation come into the growth names, or two, you actually get some Fed speak that says, hey, we've raised it enough now, even though inflation hasn't come in as much as we'd like, we think it's going to. So
Let
you
me
need a Fed pivot.
we do,
right.
and we don't see it coming anytime soon. Pre-market high in Gilead is 74.35. I'm looking at my dailies, and there's a couple tops over 74. So don't get Comcasted on this. This is a big, thick stock. This is a very big move for it. So let's keep an eye. Let's see if some papers stacked up at 74, 74 and a quarter. And just real quick, just as like the buy mentality with Gilead,
Yeah.
don't you feel that mentality? Like, I mean, Apple's a little bit different, but like, did Amazon even have a chance? And I don't want to go into the whole report because I'm going to bring on our first guest today. We're going to go with 3 guests, and then we're going to get to Amazon. And Aaron, my trusty producer, Aaron Thomas, is going to get me set up here. And I'm bringing in Kai Petainen, and he is the trading floor manager here. So let me switch my setup here for 1 second. Welcome back. I have Kai Petainen here, a mentor of many of futures Wall Street's titans. Kai, how you doing today?
Doing pretty good. Thanks for having me here. Thanks for coming here.
Yeah. So tell us about the Tozzi Trading Center, when it started, and how long you've been here since the beginning, correct?
So I actually started working here around 25 years ago, but around 22 years ago, we were one of the original trading floors in the country, one of the original 12. Now there's around 200 labs, but this was one of the original ones. And this is the third version of that lab. And it was a donor, John Tozzi. He gave a bunch of money towards it, and we built the lab. But yeah, the lab, it's open to everyone at the school. Doesn't matter what class, club, grade you're in. All U of M students are welcome to come in here. And so it's open.
How many different clubs, and estimated how many different students
use
this lab?
So we have around 7 investment clubs that come in here on a weekly basis. And then there's about another half dozen or so that come in at least once or so. So yeah, about a dozen clubs that come through here. And then we also have a class in here that meets called the Maize and Blue Fund. It functions like a class/club. And in there, they manage part of the U of M endowment, actually.
Okay. All right. And we could get into that a little bit. We'll get in that a little bit with our next guest, Eric Brand, but actually it's our second guest. But I mean, just tell us about what do they do when they come in here? What kind of access, what kind of information do they have access to?
So we have FactSet and Bloomberg, and the total cost in here, if you were to pay full price, you're talking about over $100,000 worth of software on each computer in here. So, I mean, we don't pay that much, but that's what it's worth. But it's certainly people are looking up stocks and doing valuation and DCF models and all that kind of stuff. But it also appeals to people trying to get like international data on countries, macro type data, also corporate strategy and marketing data. And they're trying to get supply chain data. So it's not just stocks, even though that's the big portion of it. But yeah, people are coming through and getting tons and tons of data.
Now, for actual trading, no, I mean, I know with the endowment, and we'll get into that with the Maize and Blue Club. But do you have is there any simulated trading going on?
Yeah,
here?
we do. We have a Rotman trading platform, University of Toronto. We use that to teach class. helping teaching classes and stuff like that. We have a class, a sales and trading class, where students are actually graded on how well they do. And so you can imagine if you want to take a really big bet, you make a lot of money, you get A+, and you lose a bit, maybe don't get as high. But so there are actually classes that use this software. Also clubs, we use it in the clubs as well. So we do have simulated trading platforms, and we certainly get the quotes and stuff from the markets as well.
Okay, and just talking about the long-term history of the fund the students been managing, which has changed on a year-to-year basis.
So it fluctuates a lot based on the students, because the students are the ones who vote on the stocks.
Okay.
They basically come in October, November. Right now they're going to start looking at the stocks soon and judging if they want to kick any of them out. We started with $95,000 20 some years ago. We got another $10,000 donation, but that 95,000 grew to around $601,000. And I was looking at this. We beat the S&P 500 this year to date by only 0.2%. But that's everyone's getting hit, and but I'm happy about that. But on average, we beat the S&P 500 by about 3.8% a year. So we're happy about that.
And what would you say to like a prospective business student? You recruit in football, you recruit in basketball, all the different other sports. What would you tell them about the Ross Business School and the Tozzi Electronic Trading Center here to to get them to put down that Michigan hat on the day of recruiting?
I mean, you're using the professional software in here, so you are using some of the top of the line kind of stuff. And it's certainly the professional software in here. So you are using that. But it's it's a very action-based environment. And it's better that you learn, I hate to say this, it's better you learn your mistakes here. The market, it's not for, it's not exactly for perfectionists. You want to make your mistakes.
Oh,
you know what I mean? Like, I mean, you're if you're right more than you are wrong, and if you're right before you're wrong, that's good. And if you can handle some of your mistakes as well, or when you get some stuff wrong.
And the most important thing, if you're wrong,
yes,
what you do then.
Oh, you got to be honest. You got to be absolutely honest about
that's one thing about the markets. The results are right in front of you in your P&L. So we've been on with Kai Petainen. He has been the trading floor manager here since the inception here at the Tozzi Center. Great having you, Kai, and
thanks for having me.
We hope to do some more broadcasts from here. Thanks for having us.
I hope you come back.
Okay. How'd I do, guys?
Pretty good.
I'm playing mute mic with Dennis over here, but yeah, not bad. Exciting to see that same kind of floor. I mean, I had a similar experience out of UCF, where I went to those kind of business rooms, learned how to use the Bloomberg terminal. I mean, there's nothing better really than really starting to learn and build some experience, right? That's where I really started doing my first, paper trades and trying to figure out what this whole trading environment really took. And so glad to see you there, Joel.
Yep. Before we get to the stocks, before I forget, I just want to give a big shout out to AT, Aaron Thomas. You guys know how inept I am on computers and doing and setting everything up. And he met me here at 6:30 this morning, and we got everything out. So great shout out. Mitch, you also helping me out. But let's get to stocks. Triple D, what report you want to hit first?
Well, I mean, we were talking Gilead just before we got before we had our guest there, so I think we should go back to that because it's a good example of the rotation. But just before we get to that, we had a good question from the chat too, and I've addressed this the last couple of days, but I want to address it again. It's a very good point. Somebody's saying, well, low PE is U.S. Steel X. Why is that going down? It's a different story too, and it's not really going down as much as you can look at what the S&Ps have done here in the last month, and U.S. Steel is kind of just following along in those footsteps. It's cyclical. So it's a different type of business. Like when we talk about Gilead, we're talking about a business that's not cyclical. People are buying drugs, no matter what. When you talk about consumer staples, it's not as cyclical as well. I mean, there's different businesses that are cyclical. So you've got to consider that, that just because it has a low PE of 6 doesn't mean it's always green light. You go into a recession, and all of a sudden, those earnings from U.S. Steel all of a sudden start going negative, and you're like, whoa, what just happened? The PE obviously goes and explodes, or if it goes negative, it doesn't even become meaningful. So you have to consider what you're buying as well. So the questions I'd be asking, if you think this rotation is going to continue, I'm not saying it's going to, but this is what's been happening over the course of the last 9 months, and I think it could continue for a lot longer than a lot of people think. You've got to ask yourself, are the earnings flow sustainable? Is it a reasonable valuation? Is the business cyclical? Is it just benefiting from, all of a sudden, we've been in, an inflationary environment, and obviously maybe they've passed through like a McDonald's. You've got to ask all those questions. But it's not just like low PE buy. Nothing is that simple. The market obviously is gravitating to lower PE, but you got to kind of open up the hood and look underneath it and know your businesses. And the ones that are cyclical, I'd be somewhat cautious on. I mean, the energy stock's been bought because they have low PEs, but they're cyclical businesses too. And eventually those could turn. So I'd be cautious just saying, okay, ExxonMobil's 8, I'm going to buy that today. Well, the business, if it would go into a recession, will start to come back in too. So there's lots of questions. Nothing is that simple. But overall, other things being equal, this market has gravitated to lower PE as opposed to higher PE.
I want to make just comment on X here. I mean, it's not the best in breed. I mean, at all.
No.
And you look at this, and a lot of times we talk about, I mean, are there better, if you want to be in the steel sector, do you want to be an X? I mean, look at the monthly chart in that thing. I mean, horrible. It had that crazy top, 2008. It's just very volatile with earnings. Now I'm looking at this steel dynamics here, STLD, and this thing's knocking on the door of the new all-time high. New core. So if you can't just slap that label on it that it's a low PE, you got to look at the historical performance of these issues, and kind of like also getting away from the steel a little bit, like the airlines. Have the airlines ever been great long-term holds? Just pre-pandemic and post-pandemic. So I think that's really one thing you got to take into consideration when you're looking at the stock, look at the monthly chart. And then it will tell you. I mean, if you're in it for a trade, if you're in there for a swing trade or a day trade or a scalp or something, it's a different thing. But I really think it's important to keep an eye on the historical patterns.
Oh, for sure. And Nucor, I always like best in breed as well. And Nucor, obviously, I've had my long-term portfolio for the better part of a decade. I've hedged it recently, and I hedged it right in this price at 135. I don't know what I'm going to do with it. It was a January hedge, so I hedged it into the new year. By doing the calls and the puts. People ask how you do that. We sell the call and buy the put at the same strike, and it's a market neutral position. So that's a pure hedge, just going to put call parity. Sometimes I do that just to hedge out because I don't know what I want to do. And then I can just lift the hedge and not realize the gain in January if I'm liking the market again, or I can push it along. It's a way to not, obviously lock in that gain, right away. So, something I've had in the long-term portfolio. So there's different ways you can hedge stuff. You can just buy puts too. It's another way to hedge it too. I hate buying flat out puts in a VIX environment. That's why I sell a call against it too, to try to bring the premium back in, because I don't want to dish out 10 to 15%, of the stock price just to have a hedge out, 3-4 months. So you've got to, analyze different ways. Whenever I'm buying a put, I usually try to sell a call against it, just to take in the premium. Yeah, just to bring that premium you're paying down. So maybe not even the whole thing, but at least bring something back in. Nick Shaheen was on the show for a long time, obviously, similar strategies, and obviously selling calls and successful.
That was more for income, though.
Different ways
for positions. So battle of 3,800 is going on here as we speak, folks. We're still down 20 3/4 handles. Dennis, there's another stock that you have a hedge on. And I can't believe we're 19 minutes into the show here, and we haven't got to the big dog, the top component in the S&P 500. And I'll first make a comment that I'll steal this one from you, Dennis. If you're knocking this thing down to 136 on a print, you're doing it wrong, right? You got down to 136. You rebounded back. Mitch, give us the report. We'll take a look. I know you got your hedge on at 155 in this.
Apple EPS coming in today at last night at $1.29, beating the $1.26 estimate. Sales at $90.1 billion, beating the $88.74 billion estimate. iPad revenue coming in at $7.17 billion. iPhone topped Apple's quarterly results with revenue at $42.63 billion, a 9.5% increase over the fourth quarter of 21, but they didn't meet the expectation of $42.66 billion. So it was just slightly off there, though. Apple CFO did say, though, that the total company revenue will decelerate in December quarter.
So the bar has been set so low here as well
Yep.
by 1 Meta, 2 Microsoft, 3 Google, 4 Amazon. Apple actually benefits from being the last of the mega caps to report because they all, SH blanked the bed. They really did. And Amazon did it 30 minutes before. I mean, when you
Yeah.
see Amazon falling this much, were they going to hammer Apple down? And, after Amazon falls $20, are they going to hammer Apple down $20 too? I mean, the markets would have just, it would have been down 1,000 Dow points, if that was to happen. So I think Apple benefits just from being late to report. This was not a great report, though. This was not great guidance. Nothing was good about this, but the bar was set very low here by the other 4. And they're like, okay, well, it wasn't as bad as Apple, or it wasn't as bad as Amazon. It wasn't as bad as Microsoft. It definitely wasn't as bad as Meta. So, it good enough. And that's why the algos hit it right on the initial thing because the numbers weren't great. And then they're like, well, it's not that bad, though. And then they bought it back up, and then obviously it didn't even trade it up. But really, the play was just to fade all those moves.
What about the
buy on the dip,
straddle?
sell
I
on the
wonder what
rip.
the straddle was in this. I mean, because there, if you straddle, strangle, whatever you took on this one up 56 cents. It's not big of a move. I mean that pre-market low 136. Boy, we get down there today, then the market's going to have to be down a couple thousand points. Pre-market high is just over 148. If you get through that pre-market high, which is going to take some heavy lifting, right? Because we're almost 2 3/4 points away from that. I
Yeah.
wouldn't get too excited. 149.05 was yesterday's high. So I'll keep it that as resistance. Psychological 152. Not 150, but 150 also. And then coming back on the downside, this is going to be a slippery slope. You take out the 144.13 low from yesterday, and you got a double bottom down at 142.65. So it's tight right now. I don't see it getting back over 150 or really getting under 140 unless you have a big market move either way.
And then let's go to Amazon because
Ooh,
obviously this
let's
was
do
the
it.
report that set the bar lower for Apple last night. This was just a shellacking. I mean, and I am long. It's my wife that's long the Amazon. She has a half-size position in the long-term portfolio. I wish I wouldn't have bought any now, but it is what it is. I mean, you got to own something. And Amazon here, wow. I guess victim too of high P as well. Maybe I should have been thinking about that before taking it through the report. I probably could have just sold it, but. Hindsight Capital's 2020. Wow, what a hit. And Mitch, what are the numbers?
All right, let's give the numbers here. EPS coming in at 28 cents, beating the 22-cent estimate. Sales at 127.1 billion, missing the 127.84 billion estimate. Amazon sees Q4 22 net sales at 140 billion on the low end, high end 148 billion versus 155.15 billion estimate. Amazon sees Q4 operating income at either 0 to 4 billion on the high end. AWS segment increased 27% year over year, or increased 28% excluding the foreign exchange rates. CFO stated that the stronger dollar led to 900 million headwind that the company had anticipated. Free cash flow decreased to an outflow of 19.7 billion for the trailing 12 months compared to inflows of 2.6 billion in the trailing 12 months ended in September 30th, 2021.
Quick technicals here. They whacked us down to 87.80. I'm not even going to look. Yeah, wow, really on that big. I think they were doomed almost. Really, that the way
They
the
were
market is
with the
sold
high
off.
PE.
Yep. At the end of the day, Meta. I mean, I don't know. I just would have took it at like an incredible number to get this up.
Yeah.
The
Yeah.
rebound stopped right at triple digits at 100. We'll use that as resistance. Really, nothing sticking out to me here on the shorter term pre-market chart. Just kind of like 95 kind of looks like a swing number. Maybe look where the big open interest is and maybe some of these lower options. But right now it looks like if you can hold 95, maybe get a little bit of a chance of a rally. Even Meta had a rally yesterday too. It bounced off the intraday low. So don't think we're going to be seeing that pre-market low. That 100, that psychological until it can get back in triple digits. I'll give you a monthly low from April of 2020, 94.46, but you actually just blasted through that. So it's not a good level. Maybe use your half in whole numbers here on the way down. Why don't you two guys do the next stock, and then I'm going to get set up here with my next guest is a
Sure.
senior at the University of Michigan Ross. It's Brooke Wrobel, and she's going to come on and talk about the resources here at the Tozzi Trading Center. So I'll let you guys do an issue, and I'll be right back with Brooke.
Just sticking
I'm
here
gonna put,
on Amazon, so I just want to give my thoughts on Amazon here.
Yeah, by all means.
Obviously, wife is long in the long-term portfolio. I'd sold all of my Amazon up. It was 3,300, so I don't know what that is on the equivalent, like 160 or something like that, maybe 165.
And hard
and
math,
then it came
dude.
back down, so I rebought half the position at 110 because I thought it had come in
Okay.
enough. It went back to 145 after that, and I was feeling
mean-
pretty good about that. But you hold on in this bear market long enough, Mitch, they get you. So buy and hold is like buy and fold in 2022. It's a trader's market. You got to take the gains when you got them, because if you don't, the market will take them for you. It's exactly what it did to me on my Amazon. I'm going to pose you a question here, and to the chat. I can pose it.
Yeah.
Are we seeing capitulation? And this was from one of the Twitter followers. I tweeted this last night as well. But I was thinking the same thing. Are we seeing capitulation on individual names? Are we is this market going to be one of those that doesn't do maybe the whoosh on the overall market because of the rotation? But do we see, Meta down 25%? We've had multiple other stocks down 20%. The FedEx, boom, the early or late in the last earnings season, I guess, or early in this earnings season, whatever you want to say. And then the Amazon down 20% at one point in time last night. Are we seeing capitulation on individual names, and maybe the market bottoms not by the market going and capitulating, but by these individual names capitulating?
Welcome back, traders and investors.
Oh,
I am
Joel's
here
taking
with
over.
Brooke Wrobel. She's a senior
You
here
can't hear us.
at the Ross
He cannot.
Business School, and she's joining me
Just
here
let
on
him go.
Pre-Market Prep. Brooke, how you doing today?
Good. How are you doing? Thank you for having me.
Yeah, well, thank you. Thank you for coming. So, first of all, how did you get interested in the markets?
Yeah. So growing up, my dad was always interested in the stock market. So he would watch Squawk Box every morning on TV. So growing up as a kid, that was what I watched, eating breakfast before school. And I just started to get really interested in the markets. And then when I came to Ross, I started speaking with Ross alum who are in sales and trading. And I just found sales and trading so exciting because it's so fast paced, as I learned this summer in my internship. And also, I love how volatile the markets are right now.
All right.
So,
all right. Well, Dad, if you're out there, start watching Benzinga's Pre-Market Prep,
Yes.
okay? Because we got the best information on there. So, talk about the resources here at Ross, and me coming from a trading floor,
Yes.
at the Merck, and then being at oldie discount and whatnot. It's a male dominated world. So.
yes.
Tell us, what the resources here at Tozzi, how they help you out, and the kind of your progression. And we'll talk about what you're going to be doing next year in a minute. But just talk about how, the resources here and how it's helped you start to achieve your goals.
Yeah, I think it's nice. There's so many women-focused clubs that help us with networking. I'm in Michigan Businesswoman, which is a club where we support each other for recruiting, which is how I got started with sales and trading. And then I just think it's really awesome that in the Tozzi Center, we have access to Bloomberg and FactSet, which is very, very unique. In my internship this past summer, Bloomberg is what you use on the trading floor. So I think it's unique that we're able to use that for our stock pitches and research.
Okay, so let's get to it. Let's talk about your internship.
Yes.
And I know you're super excited.
I'm very excited.
Yeah, so talk about your internship and then what you're going to be doing, I believe, next summer or fall.
Yep. So this past summer, I worked at Citibank in New York City for sales and trading, and I'm happy to say I will be returning next summer. And internship was just really, really exciting. I think it's different. You can look up sales and trading online and get a definition, but that's not the same as being on the trading floor. And so this summer, it was a rotational program where I rotated through 3 different desks or 3 different product types. So I started on municipal bonds, which, as I'm sure you can imagine, is pretty niche. And then I moved to securities lending, which is helping hedge funds short stock. And then I finished my rotation in regional Latin American FX sales. So all very different desks, but it was great to get an overview of the different asset types.
Did you have a favorite? Did you have, well, I hope they're not listening.
Putting me
but
in a
did they
tough
not-
spot.
Talk to me about like your hours there. Pre-market prep. Obviously, Dennis and I are prepping, and Mitch as well. It's a 24-hour. It's a global market. What do you do? Getting in there early, hitting the desk, doing your prep?
Absolutely. It's different on every desk, but I'll give you an example. My second desk, they wanted me to be there at 6 a.m., ready to go, have some information prepared, research overnight. So it definitely is an early start and pretty long hours, but it's exciting.
So talk about like when analyze. Oh, we're getting a nice pop here in the market. I don't know. Do we have some 830 data, guys? Maybe yeah, we got
PCE coming in here. Index
unchanged here at 1950. So
5.1 versus 5.2.
So just talk about like your analysis of the markets. I mean, where, as you could hear, you listening to the show here, we talk about fundamentals, and we talk about technicals, and I know they really stress the fundamentals here. Tell us, when you're researching stocks, and actually she told me when she researches stocks, she's read a couple of my articles.
Yes, I have.
I didn't ask you if it helped you or not, but I get pretty biased. But what do you do when you're researching stocks? Like just a quick example, when something for the investment club or maybe something for yourself.
Well, personally, I prefer to use Bloomberg because it's what you're using on the trading floors I've experienced. But I just like to go through. It was really nice over my internship. You got to read the analyst reports and the city research on it. So I like to read those, get a full understanding. And I also like to look at valuations. It's a big portion of, pitching stocks here at Ross, which I think is exciting.
What about technicals?
I try to look at some technicals. I'm not as well versed as you guys are from how I've been listening today.
And what we had a conversation yesterday, and I told you, with the technicals, not to let it get too complicated.
Yes.
There's a lot of fancy things on there, but what were the two things I told you? Like, just whatever you're trading, whatever you're doing, where you're looking at, what were the two things to keep an eye on?
The opening and the close.
You got it. All right. Brooke Wrobel, she's a senior here at the Ross Business School, joining us here on Benzinga's Pre-Market Prep. Brooke, thank you for getting up so early here this morning.
Thank you.
Great interview, and we're going to have you on again there, maybe from the city trading. I don't know about that, but all right, Brooke, thank you very much.
Thank you for having me.
All right, I'm going to jump in here and get towards the market.
Give us a PCE number. We just ripped higher on this.
I mean, not too big of a move. It came right back down. But PCE, core PCE coming in year over year at 5.1 versus 5.2 expected. Prior was 4.9. But really, realize this, guys. We're saying that it went from prior 4.9 to 5.1. It actually went up from the prior reading. But
it was less than the estimate.
It was less than the estimate. So it's just mixed signals in my eyes, because really, it's showing that core PCE is actually going up, not going down. That's
Triple D, did anyone give you a heads up on that, or did you get picked off?
No, I actually, as soon as it went wide, I canceled all orders. So it was about 2 seconds after that print. I was like, oh my God, we got an 830 number.
I was trying to bring it in.
We were so into
Dennis wanted to focus on Amazon. I was trying to get to the economic data.
Everything there. Yeah, we slipped up on that one. So
I had it at the bottom.
Shame on us for not warning me.
I had it at the bottom. Audience. You can see here, economic data about to be released, 8:30 core.
Yeah.
I had it there.
That was also a pretty good interview, so I'm sure you guys were paying attention to that. But it looks like they're teaching them the fundamentals here, Dennis. The fundamentals, valuations.
The macro picture is really what matters the most right now. We just had a rant on this, that you can't have the green light until you start seeing inflation come in. Well, we see a little tick. There's a glimmer of hope. This isn't like, all of a sudden we're out and we're in the clear, but you know, you got a little glimmer of hope here that it wasn't hot. At least it wasn't hot, Mitch.
Yeah.
So
it
I mean,
came
that's
in.
good.
It didn't go down though. It went up.
Mitch, man, he wants
Like-
that rapid inflation.
No,
Like
I know.
guys,
He's
what
not
do
going to
you-
fight the Fed. Come on,
I-
Mitch, put on your
I'm-
gloves. Fight the
I'm
Fed.
never gonna fight the Fed. There's no need. Ned Davis taught me well.
Yeah.
Yeah,
All
you don't want
right.
to fight the Fed, but at the same time, you've got to the inflation data is what is going to lead the Fed.
Yes.
So that's what we have to keep in mind.
This is
so
their
when you
favorite
see it,
indicator.
and point 0.5 or whatever it was, point versus 0.5 is in line there on that one number that just popped by. It wasn't like a number that's, oh yeah, we're getting this in check, but it wasn't hot. And we're in this silver lining market here right now because everything has been hammered. So a not hot number is bullish. And that's why the market is ripping higher
Silver
on this. Does
lining.
it continue? I don't know if anybody has the answer for that one. But so far, so good. We got a day that Amazon, you know, at one point in time was down 20%. It's only down 13 now. But you would think this is going to be a disastrous day. I mean, the S&Ps are 50 points off their overnight lows.
They are.
So that's the good news. The bad news still is, to Mitch's point, is this a number that the Fed's going to pivot on? No. But it's a start maybe of something. You know, give us a glimmer of hope. And the market is trying to grab one of those glimmers of hope. But fading everything, fading literally every move, it seems like, has been the play here for a long time now. So I think you just continue to play the fade game until further notice. Like last night, if you were selling the apple rip, buying the apple dip, I mean, not even that. It was just, you know, other things too. It just seems like everything, you know, if you're fading especially the rip on the rip side, if you're fading the rips, it seems like you're happy a few days later. But I mean, Boeing ripped and dipped after its earnings report. We're still just bobbing around a lot. When we're bobbing around like this, you still got to be fading moves. You don't want to jump on that momentum train.
That pop took us to 38.28. I caught it out of the corner of my eye. It was flashing, but still, I mean, we still have it. You know, we still haven't put that close behind us yet at 19. I mean, the Bulls got some heavy lifting to do, right, to get us above the close. I'm looking at some of the top components here. You know, that tech weak again. I do see, I see some green with. Let's go to Exxon Mobil here. Let's do the oil stocks. Boy, oh boy, that's one sector we've missed out on. Dennis is the oil.
You guys poo-pooed me for that trade for a while.
Okay,
yeah, but let's be honest. We've admitted that. I mean, we have been on this show. And I've admitted that I've missed the energy trade for 4 months here now. And I did not miss the energy trade at the end of September because I clearly was saying
you bought Oxy.
Pullbacks. I bought Oxy.
You did.
I didn't load up, but I was clearly saying you've pulled back enough on some of these energy stocks that they're interesting. So I wouldn't say I've missed this recent last 3 weeks, but I definitely have missed the move overall this year. So I'm not coming in these investments now. And obviously the Oxy, you know, I've sold that. It didn't participate as well. I probably picked the wrong one because, you know, you see Exxon Mobil new highs, Chevron new highs. Disappointed that the Oxy didn't participate as well as some of the other ones. I don't know why that is, but maybe because it had already been bought up so much off Buffett. But lots of things to consider, lots of balls to juggle. Mitch has been all over the energy trade, so credit where credit is due.
I mean, I got stopped out. So, I mean, I got stopped out in the Oxy downturn and wasn't able to catch this run. So, like always, I mean, you can, just because you have an outlook doesn't mean you execute perfectly, right?
No, man. If you can execute perfectly and your outlooks, that's the dream. The time. I get the call right and I screw up the trade. I mean, that happens lots of times.
That's trading.
And
that's what trading is.
You get the call wrong. But you actually make money on the trade. I mean, it's funny, you know, how execution is. It's not as simple as call a stock going up and make money or call a stock going down and make money. The psychological game, you know, not to get stopped out in the moves, you know, to hold on or maybe even to sell at the right moment in time. I mean, my Amazon purchase was an incredible purchase back in July. I basically bought that low at 110.
I remember
it went to 145. 3-4 weeks later. That was an incredible buy, but I screwed it up by holding on to it. So, I mean, timing is everything. There's an entry and an exit. You can get your entry perfect, screw up your exit and lose money. So there's lots of, you know, things to consider with trading. But, you know, let's go back, you know,
and you can do the one thing we tell you not to do. Don't frown average down.
Yeah,
The
well,
Kathy life.
It
No
worked
worries.
for
well, I
you.
did that in Netflix. I
You
turned
did
the whole
that
trade
Netflix?
around.
And
I'm up with Netflix.
Did you
Which
dump that yet?
at one point in time, I was down, I think, 50% in the Netflix position, my wife's portfolio, my wife's
We
account.
used to call the losers in Laura's portfolio.
I
I'm
do.
gonna
She
call
knew
her
that,
over the
actually. She
weekend.
knew
That's
that. She
not
didn't like that.
fair. Okay,
So-
ExxonMobil.
ExxonMobil's earnings here, and a lot of analysts, have been really saying that they're sticking with energy. I think a lot of this is what you see here in the numbers, right? ExxonMobil Q3 EPS $4.45, beating the $3.65 estimate. Sales at 112.7 billion, missing the 134.28 billion estimate, but raising their quarterly dividend from 88 cents to 91 cents a share. So definitely that EPS, really good beat there.
Got over 111, Triple D. I mean, that is a big move. And I just tell you that it made another shot at it, too. It got over 111, pulled back to 109, and then maybe got another shot at 111. I mean, you settled a couple bucks lower here. It's not a super thick stock. 417,000 shares have traded. I don't know if it's, I'm not going to say it's going to get Comcasted like what happened yesterday, but you're going to have to satisfy all those orders in the book off the open. I mean, 110 is 110. We'll open above 110, that pre-market high of 111. Triple D, what are you seeing out there in the order flow?
I think you just, and I've been wrong on the energy stock, so I'm always cautious with giving opinions because I have been wrong. I mean, it's had a huge run. I mean, we went from 185 to 110. Is a lot of this priced in already? I think so, but I mean, the energy stocks just seem to keep finding new money because they fit that bill of low PE. They fit that bill
low
of
PE?
of a
Is it
safety.
still low?
Yeah, because the earnings have exploded. The PE on this is still low, but again, they're cyclical. So if we go into recession, you could start to see that happen, but it's not cyclical like a U.S. steel. So
Yeah,
as long as oil
10
prices
reading.
somewhat hold on, they're obviously related to oil prices. As long as oil prices hold up, it's going to be okay. I mean, the price at the pumps is starting to go back up too, which is not good for our inflation picture. But I feel like it's hard to chase them here. I mean, ExxonMobil, everybody was selling it and hating it in 2020 when it was $31, and now it's 110. I mean, its stock has tripled in one of the worst bear markets we've seen, in
long
years.
time.
So, I mean, what do you want? I mean, this has been an incredible mover. I think you're coming in now. I think you're late to the party, but I thought you were late to the party $10 ago.
Yep.
Yeah.
Okay, let's go
give
CVX. Let's go Chevron Corp.
Chevron right quick here. EPS $5.56, beating the $4.91 estimate. Sales at $66.64 billion, beating the $59.17 billion estimate. Chevron says 22 investment currently below the lower end of its 15 to 17 billion guidance. Of course, that's excluding acquisitions, but not bad chart there on Chevron the last couple of weeks.
Snuck over 182 a couple times. I think the pre-market high looks like it's like 182 and a quarter, but it still has a bid up here. We're still at 181.88. So I think for this one, of course, satisfying all the the outstanding orders off the open. If you're in you're not afraid of heights, boom, you take a shot, you buy this off the open, you get a pop. But, if it goes 112, 112 and a half, 113, whatever, comes back down through that open, then I think some of those, shorter term algos will get triggered. You could have some downside. The top of yesterday, we're not too far from the top of yesterday's range. I could see a gap fill here. 181. That's not bad at all. Oh, we're right there right now. The top of yesterday's range, 181.40. Wow, we're all-time closing high was made yesterday as well at 177.90. I'm keep that as a longer-term number. It sure looks to be like that's going to be the second all-time closing high in Chevron if everything stays the same here for the remainder of the day.
All
It's
right,
just the same story as Exxon. They've just run so far here. I don't know when the eventual rug pull comes. So that's my concern.
Yeah, I think you also watch WTI, right? I've been looking to see if we can get into the 90 handle. That's what OPEC Plus wanted to set out to do. It's hit 88 multiple times. I saw it hit 80, close to 89 yesterday. So keep that on watch also.
But these stocks have been
WTI.
rallying without. I mean, oil has been range bound. I mean, this is just a
since
pure.
since OPEC Plus has come in, oil's gone up.
It's gone up. It went from 84 to 90. pulled back to 84, 85, so they got their desired thing. But no, these things are moving now on just like the core fundamentals of the companies and the valuations. And so,
Completely.
I mean, to me, I mean, crude had its big move, and I know I've been talking, bearish crude. It had that pop off OPEC plus, but these stocks have just been doing it on their own merit, and it's showing up in the earnings. So
Yeah, the underlying, what I'm calling out more like is the underlying asset is supporting it at least, not just falling down. Because the second there, it looked like we were going to get into the 60s, and we're back closer towards the 90s. So that's what I'm keeping watch for the oil trade.
right,
Let's go
we're
to
falling back. We're falling back to 3,800, folks.
Sell the
That was
rip
yeah,
again works.
that was
Fading everything just works.
The
This is
algos, the
fade everything.
algos right now, they're just reading it really simply. They saw a beat on the expectation. They jumped the gun. But when you look into the prior number compared to this number, I think that's
higher.
when you start seeing that, hey, you're going higher in core inflation, not what you want to be seeing. And of course, core PCE is the one that excluding energy and food. That means that other things are still highly inflated, not what we want to see. Let's go to pin interest.
Yeah,
It's
just
the
real
same
quick.
thing. It doesn't even matter the numbers. It's chop. We're in chop fest. It's fading moves. I'm going to continue to say it. The reason, again, that I'm having a pretty good year trading, and I know everybody loves it when I lose money because the chat loves it when I'm wrong. There's a lot of people that like me too, but there's that 25% that hate my guts and they really like when I lose money. So sorry, I'm not losing money this month either. The one thing, just to consider is that fading moves on everything. It doesn't matter what the hell the news is. This is what's working. Contrarians are kicking ass in 2022. Those guys who are running momentum systems are not doing
Getting
well.
killed.
Well,
Yep.
they're not necessarily getting killed, but they got to get out while the getting is good. So you have some good traders, like Christian Fromhertz is a momentum trader. He's an excellent trader. I think when he posts his numbers all the time, and he's beating the S&P again. I'm not sure if he's up on the year or not. But it's fantastic to be performing, that well, as obviously, when you got a year this bad. So, you're a momentum trader and you're scratching this year. That is a win, man. That is a huge win.
I think he moves to where the momentum is.
Yeah, he
right?
does. They move around.
I mean,
but
that's
what's happened?
Relative strength.
But what's happened that hasn't worked this year. So that's why Christian is such a good trader, to be like, even, and maybe he's slightly up, but to be able to scratch on a year where you're always moving to the momentum, because momentum keeps breaking. So it starts going at something and then it breaks. There's no follow through. So yeah, you can say, well, the energy trade has had pretty good follow through, but there's so many other sectors where, you're getting momentum in GM all of a sudden, starting to look good, and boom, they pull the rug out from under it. Even the energy sector, it's had some vicious sell-offs in this rally. I mean, ExxonMobil was not $105 back in June, and then went all the way down to 86, 80. You holding through that? That's a 30-point move down. That's a 28% move down. So it's been tough. It's been tough as a momentum trader. As a contrarian, it's been so much easier. So I've got to say, as a trader, it's, the way you've got to adjust. I was playing lots of momentum strategies in 2020 and 2021. It was like the trend was your friend. The trend is really not your friend as much in 2022. It has worked overall on some stocks, but a lot of it's just been a hell of a lot of chop. And if you're like using stops, you're getting stopped out of everything. So it's a tricky market for swing traders. And again, Christian, I know you listen to the show a lot. Congratulations, on holding up as well as you have this year, and possibly, like I looked at it, and even being up on a year like this, that's incredible as a momentum trader, because it's been a contrarian year. And you know what? If you're a momentum trader and you can scratch out years like this, you're gonna kill it in the momentum years. And that's what Christian, 2020, 2021, he's throwing up like 300% years. And so in these crappy years, you're scratching them 300%. Guy's an awesome trader, Christian.
Well, let's real quickly, just a preview for next week and the following week. We're going to have our boy Blue on from the chief economist at the CME, and he's going to come on. We're going to have him on before the CPI number, and then we're going to have him off the CPI number. So, all right, I'm going to let you guys cover another issue here. I'm going to take a quick break, and I'm going to bring on our third and final guest of the day, and that's Eric Brand. He's another senior here at Ross, and he has a pretty big role here in Amazing Blue Fund. We're going to talk about that. So, guys, do another issue. Now, I'll be right back with Eric.
All right, I'm gonna do Pinterest here as we need to kind of cover it. I see the chat asking about it. What is going on? Pinterest is up. All right, let's talk about those numbers here. PINS here. Boom. All right. Numbers coming in here at EPS 11 cents, beating the 6-cent estimate. Sales at 685 million, beating the 665.47 million estimate, and getting a little bit of a lift. What do you think about Pinterest? It doesn't seem like it's as bad as Snap. That's for sure.
It's not, then that's it. It's not as bad as Snap, so it's getting a lift. It has the Elliott cushion, which gives it the pass as well. I'm going to say this, and we haven't talked about the Twitter closing here today, but Twitter is now closed. Elon Musk is now, he's fired some people in there. Yeah. Do you want to be long social media stocks and now going directly against Elon Musk? I don't want to be long Pinterest and Snapchat, Facebook. I'm going to call it Facebook forever because that's what it is. I don't want to be long and going head to head with Elon Musk. You think Elon Musk, he knows how to run a company. He'll turn that Twitter into something special, I think. And, obviously, he can't participate as a shareholder in Twitter, but if you're buying Pinterest and you're buying Snapchat and you're buying Facebook, you're saying Musk is not coming for any of your market share. And I don't think that's the case. So I'd be scared of Musk.
We'll see what happens there. And now time to get to our next interview. Let's go, Joel.
Tozzi. Welcome back, traders, investors, of the Tozzi Electronics Trading Center, located here on the heart of the University of Michigan campus. Joel Elconin here with Eric Brand. He's a senior at Ross. Eric, welcome to the show. How you doing?
Thank you so much. Doing great. Happy to be here.
All right. So let's start out. How did you get interested in the markets?
So for me, I'm a really curious person. I love to ask questions and I love to learn. And I think when I really got old enough to follow what was happening in the markets, it was about learning, and it was about asking questions and thinking about a business. And from there, knew that I really wanted to have an undergraduate business degree to further my studies. And Ross kind of has provided exactly what I was looking for from an academic perspective, but also the Michigan persona is really infectious, and it's a really fun place to be and a very exciting time to be here at Michigan as well.
Yeah, sports are doing pretty good too. That kind of helps out, right?
Yep.
All right. So you are the CIO of the Maize and Blue Fund. That's a pretty big. You just took on this role here. So I got a couple questions for you regarding that. How did you evolve to that role?
So I initially joined the Maize and Blue Fund the second semester of my sophomore year. A little bit more about the fund. Kai briefly touched on it, but it's one of our student managed funds here on campus. We manage a little over $600,000 on behalf of the University of Michigan's endowment and Ross's endowment. And we actively manage the fund. So we pitch stocks, we evaluate our holdings, we do research and evaluate different positions. And it's really part of our action-based learning campaign. So it involves the concepts that we learn in our finance classes and brings them into the real world, and is applicable to obviously other classes as well, especially given the mostly fundamental analysis that we do. And so for me, I really wanted to take the opportunity to give back what I've learned. And as CIO, I've made it one of my initiatives to really help the students in the fund and take it to the next level from a DEI standpoint, but from a number of other perspectives as well, to really increase our visibility in the work that we do and prepare students for internships and going out into the real world post-graduation.
Do you start your freshman year, sophomore year?
Sophomore year. Yeah. So typically it's a class as well. And there's a few prerequisites. So typically people tend to join sophomore, junior, senior year. And there's a couple of MBAs as well, which is great.
So this is kind of tough. And I just got into talking to Brooke and Kai. So you just took over as CIO, right?
Yeah.
So in semester just started, not long ago, and now you're getting into it. So now you have to take, and you were probably part of the team last year. You guys, the first thing you have to do is evaluate all the positions that you have, right?
Exactly.
And you need trim, you need
Yep.
I mean, that's a difficult process, right? So talk a little bit about the mechanics, how you guys do that, and your criteria.
To me, and I'm sure the people on the show know better than anyone else, and you, of course, the decision to sell is equally as important as the decision to buy. And it's something that we take a lot of diligence in making. And so at the start of every semester, we evaluate the holdings in the fund and really, scrutinize our original thesis points and see where the companies are performing relative to that. And I think that, in times like this, even though I was involved with a lot of uncertainty, yes, it's a difficult market to invest in, but it's also a lot of opportunity. And there are ways to create alpha, and we talk a lot about creating alpha and finding those opportunities, particularly given so much uncertainty, where if we can make a position that's potentially differentiated from the market view, we have a lot of opportunity. And so I think it's a difficult time, but also a really exciting time to be investing and to be involved in the Maize and Blue Fund.
And how many students will work on a stock pitch? Is it what per student? Is it a group of students?
Yeah, so it's typically around 4 students. The teams tend to be pretty lean and very involved. So all of the students, are part of the class, have taken a number of other finance classes here on campus and are really passionate about this type of work, which is what makes it so special. It's really a community of people who want to learn and want to engage and want to do work and analyze companies. And, every week it's not a class to me. It's a place where I go and I learn, and I'm really excited to be there.
You guys put, so you obviously go with fundamental analysis, right? How much do technicals come into play? How much, Wall Street analyst ratings, do you incorporate into it, and overall macro atmosphere?
So the biggest thing for us is a differentiated view. And I think as students, fundamental analysis is really useful because it incorporates not only the finance concepts that we're learning, but also the strategy concepts from our classes in strategy, from our classes in management, from our classes in operations. And so it's really an interdisciplinary type of analysis that we do. And I think, trading performance technicals is somewhat important, obviously, to any investment that you're going to make. But for us as students, looking at the fundamentals is crucial.
And what do you guys use as your benchmark?
So our benchmark is the S&P midcap. And sort of the rationale behind that is when the fund was initially created, we wanted to be able to pitch large cap and small cap companies. And so the weighting of the two really enabled us to, benchmark to the mid cap as the most effective measure.
And you took the question took it right out of my mouth. Good job there. So just talk about the Tozzi Electronic Training Center. I talked to Kai, and I really think it should be open 24/7. And I think Kai should put a bet in his office here and trade the futures overnight. But talk about the resources here, what you've utilized the most, and what your favorite tools are, and some of what the other students like.
So the first thing is that the Ross building currently closes at 10 p.m. That has since changed for my freshman year on campus, where it was open. I'm not sure if it was open 24/7, but it was at least open until midnight. And so the hours there are something that a lot of students have been pushing back against, but we'll see how far
I'm
we
get
get.
Stephen Ross on the line.
Yeah,
because we got to change that.
Yeah, I totally agree. And then in terms of Tozzi, I mean, the resources here are absolutely unbelievable. Access to Bloomberg, access to FactSet, access to Kai, who's an incredible mentor, incredible teacher to many on campus. It's really a great resource for us to utilize, and it's incredibly well utilized between clubs and classes and student projects. And so it's a great place to work and to learn.
And also just what attracted you to the University of Michigan? I mean, I know you're out east. You're going to be going back out east,
yeah.
But what was it about? Did you visit the trading center here before you? Yeah. I mean, I know Harvard was your backup school. Nothing wrong with that. But tell us what attracted you here.
So I remember, I'm originally from New York. I remember coming to campus as a high school senior. I came with my mom in the middle of February, and it was an absolute blizzard. My mom did not want to go on the campus tour. I went on the campus tour. There was about a foot of snow on the ground. I came to the Ross building, and I just immediately remember lighting up. I was like, this place is awesome. The students are engaged. The students care about what they're doing. They're ambitious. They want to go out and, have a successful career. And when I saw Tozzi, that was just one example of exactly what Michigan offered. But beyond Ross and beyond, Tozzi, I think just the Michigan there's a Michigan difference, as they like to say. The people who go to Michigan and who went to Michigan just breed maize and blue. And connecting with alumni, it was just so clear that they wanted to give back.
Well, there's some people out east that have another term for the people in Ann Arbor here, but I can't say that on the air. Are you a football fan?
Football fan, a little bit.
Yeah. Any predictions for tomorrow?
I think my friend's a manager on the football team. I think that we should have a good game, but I'll be there. I'll be in the big house cheering on the Wolverines, and I'm excited to see what happens.
All right, Eric Brand, he is the CIO of the Maize and Blue Fund. He'll be heading out to Wall Street to tame the markets. Great perspective, Eric. Thanks a lot. Thanks
Thank
for
you so
coming
much.
on, and go Blue.
Go Blue.
Boom, boom.
9 o'clock. I'm going to stick with you for a couple of minutes here because I know we missed a lot of market talk. Joel's put together a nice thing. It's nice to see some young kids, obviously, talking. University of Michigan there. So it's nice to have. We don't usually do stuff like this. I know some of the listeners are a little bit frustrated because we're not talking markets as much here right now. But I mean, there's obviously good to go and to get on in the University of Michigan floor here, talk trading. But let's go talk what's happening in the markets here right now for an extra few minutes here. We'll give you some overtime here. Talking.
I'll do some ticker time. I'll stick
around with us too.
All right. We'll stick. Let's go. Let's take a look. All right. Overall market right now, just pretty much unchanged since this morning, right? Nothing going on right now.
Lots going on. Chop is the word, though. Chop.
Yeah. I mean,
it's a continuation of the entire year. Chop is the word of 2022. How do you play chop? Fade moves. Don't chase. Fade moves. Fade.
Yeah, I'll just call it. We started the morning at 8 a.m., right? 378.05. We're at 378.43. So we're up maybe 30 cents.
To give some perspective on the week here, I could get to the numbers here a little bit. Tuesday's low. I mean, we got above it. And if you could just block out that that pre-market low where they really took a 3776.75. That's right near the high from last week. So we weren't able to hold on to the gains. So minor support there, 37.90. That's Tuesday's low. And then once again, I know we blew through the close there on that PCE number, but I'm still, also, on your stocks, if you took some stuff home overnight, you're starting out in the red, pay attention to the bottom of the range from yesterday, as well as that closing price, an important mark.
Continuing on here, they want to talk Intel, Mitch. I own Intel in the long-term portfolio. I had the bad rant on it yesterday for the simple reason that I'm ticked off that I didn't get any Mobileye shares.
Looks like Mobileye is making money, though. I'll tell you that much.
It's a nice pop in Intel. The trend is down. Bag holders everywhere, including me and Joel. Yep. I just think it's hard to turn stocks around when there's this many bag holders. It's been a value trap. You can say it's a low PE stock. That's one thing going for it. Probably why it's actually trading higher here, and the report wasn't fantastic by any means. But probably because it's a value stock, it's the kind of stock that kind of do want to own right now. It's got the nice little 5.27% dividend, but this company is just firing on no cylinders. There's some companies that fire on all cylinders. This company fires on no cylinders. Management has been an absolute mess for a decade. AMD has eaten their lunch. Lisa Su just killing them in every regard. This was the Intel Inside advertised everywhere 20 years ago. Now it's just, nobody wants Intel Inside. So they need to change that culture. They need to change that thought process of the consumer that I don't want to own an Intel chip. I want to own an NVIDIA chip. I want to own an AMD chip. I'm not sure how they do it. I'm attracted to the PE. I was attracted to the PE. I've screwed up. This has been a value trap. Probably should cut the loser at a certain point in time.
This is a problem of not being best of breed anymore. When you're looking at performance, now they're not best of breed. And so they really need to get back into beating the AMD chips. That's really what needs to happen. If they can do that, well, maybe the story can reignite. But right now, it just seems like Intel has been on a horrible trend in the last, let's say, 5 to 6 years.
For sure.
And that they're just losing out to the AMD.
Yeah. I mean, and just upsetting shareholders. I think I'm not the only shareholder. I was reading Twitter. There's a few shareholders that are upset about the same thing. Like, You say, oh yeah, you do Mobileye, you see the stock trading out there, you didn't get any shares. Well, you still directly own it. You indirectly own it through Intel. I mean, it's just not exciting though. It's not like I
Not
can't
what
do
you
anything with
expected.
it. No, I'm disappointed. And I'm like, well, I actually bought Intel
I
originally
know.
back in the day because of the Mobileye potential for the spinoff of it. I do think Mobileye is going to be, a good company, and I could just go on the open market and buy Mobileye. But why wouldn't $20 is where, and then it goes to 28? I mean, why in the hell, weren't we allowed to participate in it like that? So directly. So I don't like the way they did that either. I think the management's just an absolute mess.
We snuck over 28. We actually snuck over 28.50 after wow, that's a big bar there, but got up to 20. I don't know if we're gonna get back up into that area. I'm just looking at a couple daily highs here. That's the only thing we can go on right now. 27, actually 4 daily highs between 27.48 and 27.80. So there's been someone there. Maybe they just had a short-term trade, picked it up at 26. I'm getting my $1.50 out of it. So that's pretty good resistance right now. I see other highs at 27.84. So I don't know. Get and hold 28. Yeah, you'll challenge that pre-market high. You don't. You got a ways to go to get down to that close. That close is way down there, I think, at 26.27. So I think you'll find buyers ahead of that on any kind of decline. And here we are. That another chop dip under 3,800. They bought it now. Now making a run for unclose. I'll tell you, we end up green today. It's going to be green for the week. I'm gonna, besides for the, mega cap disaster earnings on, a 3 out of 4. I think you can at least wipe your brow and say, well, we're a ways from 3,500.
I think the market has performed unbelievable considering the tape bombs, to Tommy Lackey's term, we've had. We've had Microsoft get hammered on their report. We've had Google get hammered on their report. We've had Amazon get hammered on their report. We had Meta get hammered on their report. And the S&Ps aren't going down. Well, if you're a bear, that's got to be concerning. Like, what's going to take us down when the mega caps don't take us down? I mean, maybe an escalation and geopolitical situation, but this is good news for the bulls. And let's just call it how it is. The Bears are not winning right now. Not at all. Sorry, Mitch. The Bears are not winning. And does it continue?
You sure?
I mean, you're a bear. You've been a bear for a while. And I have kind of been on the fence. I'm kind of with you. But I've been changing and starting to buy stocks in the long-term portfolio because the tape is telling me that this market is now all of a sudden coming in and looking for things to buy as opposed to, naturally just looking for things to sell. Are you not a little bit concerned that S&Ps didn't sell off at all when 4 of the big 5 got killed?
No, because you just said it. 4 of the big 5 got killed. So in my eyes, leadership always, the market might not be.
Well, we're getting new leadership
right
Mitch.
now.
That's the thing. That's the thing we've been talking about for the last couple of days. It's like right in front of us. It's happening, and we called it out a couple of days ago. I mean, I'm looking at, I got my top components here, and I know that I didn't even check. I didn't get to see. I know Meta's fell out of the top 10. Now you're gonna get Exxon Mobil moving up, and then you're gonna get Chevron moving up, and you know what? J.P. Morgan. That fell out of the top 10, but that was like 6 or 7 at one point. You're going to tell me, are you bearish JP Morgan? Are you bearish Bank of America? I mean, they're not, the most sexy stocks in the world, but look at that
recession. Recession. That's what I would say.
Higher interest rates are good. Well, recession, what was our GDP?
Well, recession is, in my eyes, is still coming. It hasn't hit yet. And we've been talking about how the consumer still has cash. We just saw GDP come. That shows me more and more that recession probably could still be coming. What do the banks say? The banks say 6 months into the year. That's what they're looking at. That was JP Morgan's, Jamie Dimon.
Okay, Jamie Dimon said we had another 20% low to go at just about the low. So I don't want to knock on Jamie Dimon. You can read my article on that.
It's a good argument, though. And just even listening to it, like Mitch makes some fantastic points. And I'm still kind of on the fence here, approaching a market neutral, fading moves, not going rah bull, but I'm fully off the bear train right now. Like, I'm not rah bear, because if we were coming in, just pose this question in a different way, Mitch. If you were coming into this earnings season and the S&P basically, when the mega cap started reporting, was trading at 378, that's where we were 5 days ago. And I told you that Amazon was going to go down 20% at one point in time. Meta was going to fall 25%. Microsoft was going to fall 15%. And Google was going to fall 10, 12%. Would you say the S&P was going to be higher?
No, I would not. And so that does make up for your bull case. The biggest thing
I don't
though,
have
to
a bull
me-
case.
No,
I don't
no,
want
I'm
to put
just
words
saying.
in my mouth. I'm
Well,
neutral right now. I'm trying to figure out my case.
For the bull case, right? For
Yeah.
the bull case, quote unquote, right? And so my biggest thing there is, what is the true positive catalyst that's come into the markets that are making you think that this is a complete change in environment? What's the
That
positive
feels-
catalyst?
It just is the resilience that I'm seeing. We didn't have this resilience a month ago. We were selling stocks no
Okay.
matter what. FedEx came out, warned, market got murdered with it, as it should. But now you're getting, warnings, even Apple. I mean, look at Apple response. Their specific commentary was that earnings was going to decelerate. They put the decelerate word in there.
Exactly.
And the algos hit it down $5 on that. And they bought it right back. I mean,
I think at the end of the day, you guys heard me talk about this. I feel a lot of people are still trying to play that October would be the bottom, right? And so I think a lot of people are positioned in here trying to call the bottom. There's nothing wrong with that, right? Because at least it seems like we're not having that big of a risk to the downside, because if these big stocks are going to report down and we're not going down in the overall market, it seems like at least, and I've talked about this, the path of least resistance right now in the short term has been to the upside. So that does include.
I mean,
more of
the
your
other
bullish
argument,
outlook.
the other argument that you can make here, and I've been giving you guys the eyeball test when I went to Kohl's a couple weeks ago, and when when I went away last week, the Fed is throwing everything but the kitchen sink at this market, okay, and look,
can't knock it down.
it can't knock it down. It can't not. I mean, whatever. Retailers are due to report. We're coming into seasonality. Towards the best 6 months of the year, a lot of November through April. So a lot of different factors that are coming into it. But I think, Dennis, I think you posed it the best. Is like, if you would have had the script about Google, Microsoft, Amazon, if you would have had that in front of you, I mean, you would think you would be getting
New
your
lows.
bids out there at 35.05
Yep.
because you didn't want to miss the 35.0275 low. That's what you would be thinking. So a lot of different ways you can skin a cat here. Triple D, I know it's 9:13 here, so I know you're getting ready for the open.
Yeah, and it's been a really choppy open. People get frustrated, with this, market neutral thing that I've been saying for 3 weeks. Probably because I'm so bloody opinionated. When I come in market neutral, people are like, well, you got to make a call. You don't have to make a call. This is like a curveball market here. All I'm doing is fading moves day trading. I have no swing trades on. I'm fading moves day trading. And sometimes the best thing to do is just sit on the sidelines and play it out. My friend Mike texting me last night. Mike, if you're there, I'll give you a shout out. He just tied some money up, in GICs and can at 4.5%. And I'm like, it's not a bad play right now. Because I can't, he's always like, what do you think of these stocks? What do you think of these stocks? And it's tough. I could see Mitch being correct. And I could just see, and I don't think Joel's in the full bull camp, but I could see the bull thesis, like, let's go, to a Dan Ives, who's been dead wrong for a long time. We've had him on a show, but, he's been, saying eventually, these stocks are going to turn around. I could see it happening too. But the indexes are just holding up so well that I think the smartest call might just be that this, continues this, that the indexes actually do hold up and this rotation keeps us afloat. Unless you get, a breakdown, a Taiwan invasion would destroy the market. Nuclear obviously is just not even talkable. It just gets ugly. But I think from a market's perspective, just looking at the economy, the economy's still humming along, and the Fed's not going to lay off the gas, but at a certain point in time, do they have to?
We haven't mentioned this point in a long time, and we haven't used this term because the market, this hasn't been a characteristic of the market, but there's a little bit of FOMO. I mean, if you're
I've
not,
got it.
yeah, if you're not in,
Where did it come from, though?
Let me finish.
Yeah.
If you're not in, and like everyone's talking about a Fed pivot, right? I mean, first they gotta stop, going up. But the first time something, comes out of Powell's mouth that says, yeah, hey, things are looking, you're just going to have to be lifting offers because, it's just,
A
that's the
violent
way
rally.
yep, that's going to be, you're going to one day and, oh my gosh, the market just went up 1,000 points and then people will short into it. Then you come in the next morning and the futures will be up, another 60 handles and you'll be like, oh, I don't know. So, when or if that will happen, we're still fighting inflation. There's still, we talked about having a bad Q3 earnings season. That's come to fruition for the mega cap tech. But the market's hanging in there. So Triple D, final comments. We'll let you go, and then I'll do a few tickers.
Yeah, just unbelievable resilience. So I'm gonna go trade the open here, but unbelievable resilience. Even today, with Amazon trading down 13% and the S&P flat. S&Ps, the rotation is keeping it floating. I'm not sure that breaks anytime soon.
Short term, I could even see us going up today. Now, one of the things that I would say is the biggest risk in this market to me is that the Fed continues with their initiative. They reiterate that we've never mentioned that we're pivoting. We've never mentioned that we're pausing. Inflation has remained high, And GDP just showed us that there isn't the weakening in economy that was stated by many analysts this week, saying that there's a weakening in the environment. Well, the GDP number didn't give them that. If anything, it gave them some more strength to say that there isn't weakening in the economy, and we're going to continue raising interest rates until we get a handle on inflation. Then we can talk about pausing.
Okay, I'm going to hop, but that's a good summary, Mitch. And Fed speak is still a risk, so I'll give you that as well.
Yeah,
Triple D, our guests were much better dressed than us once.
No,
again.
I know for sure.
Well, at least
You're
he didn't
well dressed today, Joe.
At least he didn't wear the same T-shirt twice this week.
Did I do it?
You don't have the Michigan.
Sometimes I don't change my shirt during earnings season.
All right, guys. We'll see you next time right here. Pre-market prep, like always. Appreciate you, Joel. Special show. Look at that guy. We'll enjoy seeing you there, and we'll have you back like always. We'll see you next time right here on Benzinga's Pre-Market Prep every single morning, 8 a.m. to 9 a.m. Eastern, where you guys get ready to rise and shine. And it's time to trade. Almost 9:30. You guys have a great trading day.
Go Blue.
All right. Have a good one, team. See you next time.